Financial stability, I would now like to just focus briefly on the aspect of financial stability. Financial stability, as we have stated before, is a public good. The Reserve Bank judiciously uses micro and macro-prudential tools to safeguard financial stability. The recent preemptive measures taken by the Reserve Bank in respect of banks and NBFCs were geared towards addressing potential risks and preserving the resilience of the financial sector. We do not wait for the house to catch fire and then act. Prudence at all times should be the guiding principle, should be the guiding philosophy, both for the regulators as well as the regulated entities. I now propose to turn to the external sector. In October this year, both merchandise exports and imports came back to the expansionary zone. Services exports remained buoyant during the second quarter of this year. India has remained the top remittance receiving country. The net balance under services and remittances is expected to partly offset India's current account deficit and keep it within the parameters of viability. On the financing side, foreign portfolio investment, that is FPI flows, have seen a significant turnaround during the current year, with net FPI inflows of $24.9 billion up to December 6, as against net outflows in the preceding 2 years. Net foreign direct investment, that is FDI, on the other hand, moderated to $10.4 billion in April-October this year from $20.8 billion a year ago. Net inflows under external commercial borrowings, that is ECBs, and non-resident deposit accounts are, however, much higher than last year. India's external vulnerability indicators exhibit higher resilience in comparison with EME peers, as well as since the taper tantrum period. India's foreign exchange reserves stood at $604 billion as on 1st December 2023. We remain confident of meeting our external financial requirements comfortably. I would now like to announce certain additional measures. First one relates to review of regulatory framework for hedging of foreign exchange risks. The regulatory framework for foreign exchange derivative transactions was last reviewed in 2020. Based on market developments and feedback received from market participants, the extant regulatory framework for forex derivative transactions has been refined and consolidated under a single master direction. This will further deepen the forex derivatives market by enhancing operational efficiency and ease of access for the users. The next announcement relates to framework for connected lending. The extant guidelines on connected lending are limited in scope. It has been decided to come out with a unified regulatory framework on connected lending for all regulated entities of the Reserve Bank. This will further strengthen the pricing and management of credit by the regulated entities. The next announcement relates to regulatory framework for web aggregation of loan products. The Reserve Bank had introduced the regulatory framework for digital lending in August-September 2022. The digital lending ecosystem also comprises of services that aggregate loan offers from various lenders, and this is called web aggregation of loan products. Now, this is meant for the guidance of the customers. It enables the customers to decide which loan product to opt for. Several concerns relating to such web aggregation of loan products which harm consumers' interest have come to our notice. It has therefore been decided to lay down a regulatory framework for web aggregation of loan products. This is expected to result in enhanced customer centricity and transparency in digital lending. Next announcement relates to setting up of a fintech repository. Financial entities like banks and NBFCs in India are increasingly partnering with fintechs. For better understanding of developments in the fintech ecosystem and to support this sector, it is proposed to set up a fintech repository. This repository will be operationalized by the Reserve Bank Innovation Hub in April 2024 or earlier. Fintechs would be encouraged to provide relevant information voluntarily to this repository. The next announcement, there are two announcements relating to UPI. The first announcement relating to UPI is for enhancing the UPI transaction limit for specified categories. The limit for various categories of UPI transactions have been reviewed from time to time. It is now proposed to enhance the UPI transaction limit for payment to hospitals and educational institutions from rupees 1 lakh to rupees 5 lakh per transaction. This will help the consumers to make UPI payments of higher amounts for education and healthcare facilities, for education and healthcare purposes. The second announcement relating to UPI relates to it relates to e-mandates for recurring online transactions. It's actually, it's a much broader announcement. It relates to e-mandates for recurring online transactions, and specifically it focuses on enhancement of limit for specified categories.